Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that both bond and equity investors are still buying despite major repricing underway in the giant bond sector. The S&P 500 is up today. The US Treasury 10-year benchmark yield is higher too. But as the embers of last week's bank blaze smoulder, investors are assessing where to next. Skepticism that the risk to banks is over is high. But the weekend unveiling of a large new central bank facility coordinated by the Fed only brought token demand overnight, which is a good sign. And the pressure on some American regional banks remains, however, especially First Republic, where a second rescue is underway. And investors wonder about the sense of the Swiss concentrating all their banking risks on one giant global bank. However, with the Fed reviewing the situation at its meeting this week, investors seem to now expect a rate hike pause, although 25 basis points are still priced in for this Thursday's announcement. Equity investors aren't shying away from buying. But in Hong Kong, there was a very sharp sell-off of bank shares, especially those of HSBC, which fell more than 6% yesterday. There were also sharp markdowns of other European-based banks overnight. And as widely expected, China kept its key lending rates steady for a seventh straight month at its March fixing late yesterday. And Taiwanese export orders fell for a sixth straight month in February, hurt by both slower Chinese and other global demand. These exports are a bellwether for global tech demand. In Germany, producer prices are retreating now and down less than 4% on an annualised basis, the fifth straight month of decline, month on month. And the German central bank had an improving assessment of the prospects for the German economy in its latest update. Locally, the most likely impact of global bank turmoil will be that risk premiums rise for debt funding. Benchmark yields may fall, but those risk premiums are likely to rise, limiting the benefit of lower interest rates. The US Treasury 10-year yield starts today at 3.49% and up another 5 basis points from this time yesterday. And the price of gold will open today at $1,976 an ounce. That's down $13 from yesterday. And oil prices start today down 50 cents. And just under $66 a barrel in the US, while the international Brent price is just under $72 a barrel. And the Kiwi dollar is down a quarter cent against the US dollar, now at 62.5 US cents. Against the Australian dollar, we're a half a cent lower at 93.1 Australian cents. Against the euro, we're also half a cent lower at 58.3 euro cents. That puts our trade-weighted index at 70.5 with a 40 basis points retreat. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.